On today's episode, we are going to take a look at AMD. They just reported earnings after hour, and the company is down about 3%. So let's get started. The first thing we want to take a look at is just this company's stock performance. Right now, they just reported earnings, and like I mentioned, after hours, this company is down about 3%. This company has been fluctuating. It was as down as about 6% when I first started to look at it. But now let's compare this company to its all-time highs in February 2020, and let's see how far this company is. Compared to where the stock ended on today, April 28, 2020, this company is down 5.76%. Then again, by that 3% that is down after hours, so probably somewhere around 6 to 7%. Okay, so now let's take a look at AMD's results for this earnings, and this was for Q1 earnings of 2020. For Q1, non-GAAP earnings per share were 18 cents, and that was in line. GAAP earnings per share were 14 cents, and again, that was also in line. Revenue for this company was $1.79 billion, which was up 40.9% compared to same time last year. So that's some big growth right there. But again, that was in line of what analysts expected. All right, so in this article, we're going to take a look at the breakdown of AMD's revenue. So AMD's revenue is actually broken down by two different segments. The first segment is called computing and graphics revenue. So computing and graphics revenue, this is pretty much their CPUs, their GPUs, everything that goes into your computer, into your laptop. The second is enterprise, embedded, and semi-custom revenue. This one is a little bit different. It again includes chips, but these chips are the ones that go into like data centers and big servers. And then they also have the semi-custom, which are the chips that go into your video game systems. So I don't know if you guys know, but AMD are the chips that go into the PS4 and to the Xbox One. And they're also the ones that are going to go into the PS5 and the newer Xbox console. So now that we know the difference between those two segments, let's see how the revenue is broken down. Computing and graphics revenue is up 73% year to year and is down 13% quarter to quarter. It makes up 1.44 billion of that 1.8 billion dollars. So that's a huge portion of this company's revenue comes from that segment. But again, that segment gets broken down into two parts. It gets broken down into computing and it gets broken down into graphics. So there's really two major products in there within that one sector. The second sector, like I mentioned, was enterprise, embedded, and semi-custom. And this one is down 21% year to year and 25% quarter to quarter. And the main reason this one is down a bit is because right now we're in this part of the console gaming world where not many PS4s and Xbox Ones are being made. So for that, there has been a slowdown in there. But it has been offset by the increase of higher server chips, which is their EPYC processor. So they're seeing a bigger increase in EPYC processors, but a slower down in the gaming industry. And one thing is upcoming this holidays is when we're going to see an increase in this gaming semi-custom chips, because that's when the new systems are going to come out. So I think in the next quarter or two, we're going to see a big jump in this enterprise, embedded, and semi-custom revenue segment. One thing I have noticed about semiconductor customers is they are a very cyclical type company. So certain quarters they're doing really good and certain quarters are actually pretty slow. So for certain companies, I like to compare year to year, and certain companies I like to compare quarter to quarter. For AMD, Intel, MU, and Nvidia, those are ones I like to compare year to year because, like I said, these are very cyclical companies. So even though we did see a down quarter to quarter, we did see a nice amount of growth year to year, especially in the computing and graphics segment. Next, for Q1, adjusted gross margins was 46% compared to same time last year was 41%. And that's actually a pretty huge jump in gross margins, and that's something that I'm very happy to see. So at the end of the day, that means this company gets to keep more money. For Q2, and this guidance what AMD has given, I've been reading, and it's supposedly one of the major reasons that the company is down right now. For Q2, AMD sees a revenue of $1.85 billion. The expected for next quarter is somewhere around $1.9 billion. So obviously this is a slowdown compared to what analysts expect, and this is what many are saying is driving that drop in price. AMD is also estimating a gross margin of 44%. That's actually, again, pretty good numbers, and pretty close to that 46 that they got in quarter 1. And one thing to keep note is usually when companies give some form of guidance, they kind of give it a little bit on the reserve side, on the conservative side. So in theory, we might be able to see some better numbers than these. At the end of the day, AMD guides for the fiscal year of 20 to see a revenue growth of 20 to 30%. So you can see why this is still considered a growth company. A 20 to 30% growth in revenue is pretty crazy. All right, so next I wanted to take a look at this company's slideshow that they provided. We're not going to go over the whole thing. there's certain things that I liked out of it. I took a look at it already, and some of the informations were information that I provided to you earlier, but some of the one I'm going to present is new information. So the main reason I'm pretty bullish in the semiconductor world, and again, one in AMD, maybe not at this current price. We'll talk about my valuation in a bit. But as overall the business sector, I am pretty happy with semiconductors for 2 reasons, especially AMD, Intel, and Nvidia. One, all their items can be used in the data center world. This data center world is seeing such a huge increase with cloud, enterprise, and accelerated computing. These are the future that we can foreseeably see. So any company that I feel can help that future out, I feel like can do such strong returns in the upcoming years. So that's why I'm pretty bullish on AMD, I'm pretty bullish on Nvidia, and pretty bullish on Intel. And then again, same with those clouding and enterprise companies. I'm pretty bullish in Google and Microsoft because they are, and Amazon, right? Maybe not right now at their current price, but overall the business segment is what I'm bullish in. Just because I'm saying bullish does not mean I'm bullish on the price. I'm bullish as the business segment of a whole. So, right, Microsoft, Amazon, and Google are all into the cloud and enterprising world, which are seeing crazy growth right now. The second reason I like these companies is because I do foresee esports being one of the biggest gainers in the upcoming years. I've seen the trends of how esports continues to grow and grow and grow. And again, these companies are ones that provide a lot of the power for these computers. So that's another reason why I just wanted to let you guys know the 2 major reasons I'm pretty happy with AMD, Intel, Nvidia, and Google, and Microsoft. All right, so now let's take a look at the financial results. This was again shared by us by AMD in their Investors Relations website, and I've only highlighted the things I haven't talked about. So now let's take a look at some more highlights. First, operating income for this company was $177 million compared to an operating income of $38 million a year ago. So we see that growth year to year. This past quarter though, this company provided $348 million in operating income. And even though I say I'm more of a year-to-year type of guy opposed to a quarter, seeing that big drop in operating income from 348 to down to 177 this quarter, I don't expect to see that kind of decline. So that actually is not sitting well on my side, and I can see one of the other reasons that this is down a bit more. One thing they do say is operating income did decline due to lower revenues and higher research and development expense. So actually I had to jump back into this company's presentation, and one thing I want to talk about is this company's the information they provided for the enterprise, embedded, and semi-custom segment. Like I mentioned, this segment includes a lot of stuff that goes into data centers and data servers. And even though this portion of the company probably makes up less than 30% of the total revenue, I think even much less than that, 348 of that 1.9. Let's just do the quick math real quick. 348 divided of 115. So less than 20% actually. So less than 20% of the total revenue comes from this segment. But this is the segment a lot of investors are actually looking at because of that data center. So I wanted to see how their EPYC CPUs and our Radeon GPUs, which are the ones that go into the server segments, are doing. And here they do mention that server unit shipments grew by double-digit percentage compared to the same time last quarter. Unfortunately, at the moment, AMD has not really given us information of how much server units they're shipping. They're pretty much just giving us these quarter-to-quarter values. I'm not sure right now if they're doing it because the numbers are so small, but it's still impressive to see a double-digit increase by quarter to quarter. AMD also mentioned that Microsoft Azure, Google, and IBM announced new second-gen AMD EPYC processors offering, and they are seeing higher demand from cloud providers to accommodate working from home. And that's the big thing. One thing I did do Micron Technologies, one of the earlier earnings I did this year, and the first thing they mentioned, and which I think was pretty happy that I did their earnings, they mentioned that everybody right now, there has been a huge demand by the cloud providers. All right, so right now we're in this company's income statement. Here, we pretty much talked about everything. We talked about revenue, we talked about their gross margins. The only one we really haven't talked about is research and development. And as a semiconductor company, and for most technology companies, I personally like to see an increase in research and development. When I see that, it means I'm seeing a growth in engineers in that corporation, and more projects are being built, are being used to increase their technology. And as a technology company, the only way you can keep growing is if you keep growing your technology IP. So for this quarter, this company had $442 million in research and development. Unfortunately, if you guys have seen my Intel video, this is pocket change for what Intel does. Intel has a huge amount of research and development. But again, this is not a versus video, but just to keep in perspective. And this is compared to the same time last year, where this company had $373 million in research and development. So we're seeing that increase year to year. And just last quarter, this company had $395 million in research and development. Even just quarter to quarter, this company is using more of its money for research and development, and I'm actually pretty happy with that. And that's usually pretty weird, because most investors don't like to see an increase in expense. But that's one of the few expenses that I actually like to see an increase on. But again, just because it increases, it doesn't mean the money is being used smartly. Sometimes it gets to a point where they just have too much money and they're just using different projects. Next, let's take a look at this company's balance sheet. And if you guys have seen my channel, this is my favorite document to take a look at. Here, I've only highlighted a few things because not much has changed, but so I just want to give the overall picture of this company's balance sheet. Let's take a look at total current assets. This company total current assets compared to just a quarter ago. So right now it's sitting at about $4.4 billion of total current assets compared to $4.6 billion of current assets just a quarter ago. There hasn't been much change anywhere to really throw a red flag. It has been 50 million here, 50 million there, 100 million there, but no red flags to really pinpoint at anything. The only thing I have highlighted from their current assets is cash and cash equivalents. I just want to know how much this company has in cash. It has about $1.33 billion in cash, and it has about $55 million in marketable securities, so close to $1.4 billion in very easy cash. Total assets for this company are $5.86 billion compared to $6.6 billion a quarter ago. Again, a decrease of about $150 million. Most of it coming from that change in that total current assets. Everything here, like I said, has changed very little. Then nothing really throws a red flag. And when I mean a red flag is just when I see a huge move in one asset to another, I start to look into that one more deeply. But if there's no real change, to me, it's just normal operations. Next, let's take a look at this company's liability. No big changes in total current liabilities. Total current liabilities always fluctuate just because depending on the expense of one quarter compared to another quarter. So I really much just want to take a look at long-term debt. Long-term debt last quarter was $486 million. This quarter was $488 million, an increase of $2 million compared to last quarter. And $2 million only means one thing. It's just interest being added on at the moment. But one great thing is this company has about a 1-to-3 ratio of long-term debt to cash. So this company has about 3 times more cash than it has long-term debt. And I think that's really good. That shows that this is a company that can survive a bad time. And that's usually what you like to see. So finally, let's take a look at this company's valuation. So for December 2021, and if you guys have watched my channel, I like to take a look at forward PE ratio 2 years from now. For December 2021, this company is expected to make $1.59. That would give this company a forward PE ratio of 35.44. Like I mentioned, sometimes I might be bullish in the company, but this does not mean I'm bullish at the price. Right now, a 35, let's take a look with the drop, with this drop of $53. Let's say $53 divided by that, how much was it? 1.59 gives us a forward PE ratio of 33.33333333333333. You guys get the point. To me, that's still a little, it's not crazy expensive. To be honest, if I was opening a position and I was pretty bullish in AMD, that does not seem like crazily overpriced. Right now, I do have a nice amount of position on AMD. So with this current PE ratio, it's not at a point where I would want to buy in some more. For me, somewhere in the mid 20s, high 20s would be a little more enticing for me. But at the current forward PE ratio does not mean, again, this is for me, it is different for every investor. Just because I think it might not be the best time to go now doesn't mean I'm right? It's just for me, I don't feel comfortable going in. This company can double, can triple, and quadruple in price. Like I said, I'm very bullish in the business. But sometimes I like to be patient, and if I want to buy more in, I wait for better times. So this is not the time for me right now. But again, that does not mean the investment as a whole is good. And the company can continue to go up and up. So this should never be taken as advice. So let me know what you guys thought about today's episode. Let me know, how are you guys feeling about AMD? Were you guys happy for their earnings? Make sure to post on the comments and let me know. Take care, guys. Have a good night and see you next time.